Hello all of you. I hope you all are doing good. So today we are starting revision series on accounting standard for CA intermediate student. Before we start this series on accounting standard, let me tell you honestly that here, easily you can score 60 plus in advanced accounting if you follow this revision series. So the question will come in mind, how it can be possible that through this revision series that a student can score 60 plus in advanced accounting. Let me tell you that. Because I believe that, and honestly it is that here, advanced accounting is the easiest subject you have in CA intermediate that here. And what you know that here, you should know that what should be the strategy to cover the entire syllabus in less amount of time. This is the mantra of success that you have to understand each and every concept. But at the same time, we don't have enough time because you have 6 paper to cover that here. So you should have a strategy for each paper, how to cover the entire syllabus in a less amount of time so that you can do multiple revision that here. Okay. So 2 things here in these accounting standard series, and don't worry about the consolidation, financial statement, amalgamation, cash flow statement. The separate series will come on that here. I'm going to cover in detail those chapters as well. So here, the first thing is that is a concept that here. As you can see here on screen that here, the Rapid Gist book, it's a concept book that here. Okay. And if you want to purchase this book, link is given in comment section. You can purchase this book, and how it will help you, because it is going to cover the concept of all the accounting and other chapter as well. Okay. So this book, basically the tracker also is given in here in this book that for each and every chapter, first revision, second, third, fourth, date mentioned that here. If you find any difficulty, so you can write the remarks and all here. So here we cover these basically when I take the exam oriented batch and regular batch, that is where I tell to student that here to fill all these and make a proper track record of your how we are doing the practice in accounting standards and other chapter as well. Now what is important that here, now this is a concept book that here, as I'm to start today from accounting standard that here. So let me go to the accounting standard. This is accounting standard number 1. Okay. So I'm going to cover, start from accounting standard 1, but don't worry about the introduction and applicability of accounting standard chapter and framework chapter. Okay. And framework chapter, I will cover it later on that here. So today I will cover this introduction and applicability of accounting standard and this framework chapter as well. But I'm starting with accounting standard 1, that is disclosure of accounting policy. So this book is a concept book. So here in every chapter on first page, you will see that here about a chapter roadmap. What is this chapter roadmap? So in chapter roadmap, you will come to know that what we are going to cover in this chapter. As you can see that here in AS1, disclosure of accounting policy, introduction, meaning of accounting policy, need for disclosure of accounting policy, fundamental accounting assumptions, selection of accounting policy, manner of disclosure of accounting policy, and change in accounting policy. These are the 7 points we are going to cover in accounting standard 1. And some of you may think, so what is this last minute mastery revision guide? Basically in my regular batch and exam oriented batch, after every chapter, I tell the student that here, when you will do the review, no need to do the practice of all the question. Generally people, what they do that they attend the class and they do the revision, they solve all the question. No, never. You don't have enough time. So I'll tell them in class that here after every chapter, which I'm going to say the practical question, case scenario question, theory question, focus point also. So what they have to do, what they have to cover in their revision, that's help them to do multiple time of the revision in less amount of time. Okay. So here from this book, we'll start the one by one. I will cover all accounting standards. Today we are going to cover AS1, disclosure of accounting policy. After the discussion of every accounting standard, we are going to cover the top 100 exam relevant question altogether from all the accounting standard except AS21, that is consolidation, 14 amalgamation, AS3 cash flow, because separate videos will come for them and separate question I will share with you. Now this concept book, you can purchase it, link is given in comment box, and these top super 100 relevant question you can download it, link is also given in comment section. Now, so what is strategy? We will cover concept of each and every accounting standard, and then we'll solve a question from this book. Okay, that is super 100 question. You can download this book. Okay, this book you can purchase it. Okay, so let's start that here. Accounting standard 1, that is disclosure of accounting policy. Now, remember that as you can see that the name of accounting standard is disclosure of accounting policy. So what it says that here, these accounting standards talking about what? The disclosure that here. So it says something they're talking the disclosure. What we have to disclose? We have to disclose the accounting policy. So AS1 talks about the disclosure of what? Accounting policy. But where I have to disclose this? We have to disclose in notes to accounts. Where we have to disclose it? We have to disclose in notes to accounts. Okay. Notes to accounts, we have to disclose this accounting policy. Now, why you first will start from one by one from here. Okay. Each and every point I will discuss with you. First, introduction. Why you think so that here? Is there any need for disclosure of accounting policy? Don't you think so that diversity in accounting policy unavoidable to a varying business situation? Yes, it is correct that here. Everyone has their different accounting policy they may follow. For example, that here, I may follow to do the valuation of inventory valuation. I may follow FIFO method because there are some reason why separate different methods followed by different people. You may follow the weighted average method when we do the valuation of inventory. So different methods are available. There are so many methods are available. So how the users of the financial statement? Now imagine you have a balance sheet or P&L account in front of you. How will you come to know how they have done the valuation of inventory, closing stock that year? How you will come to know? It should be mentioned. Okay, I'm just giving you one example of the inventory valuation. They say, so there are so many accounting policy. So what is going to happen? It is important to disclose them. Therefore, it says that here, there is no single list of accounting policy which are applicable to all circumstances. We cannot say that. No, it's a weighted average method. You have to follow weighted average. No. They have different options. Some may follow weighted average method. Some may follow FIFO method here. Okay. So they say accounting standard permit multiple policies leading to differences in reporting information. Yes, correct. As accounting standard, what they do that here? They give us the various options. Example I am giving, follow weighted average method or the FIFO method. So it is important to disclose them which accounting policy we have followed. The different accounting policy will come to meaning of accounting policy as well. I'm just giving an example here. So AS1 required disclosure in notes to account of significant accounting policy adopted by the enterprise for better comparability and understanding of financial statement. Correct? So this is important point where we have to disclose this accounting policy in notes to account. Why we have to disclose in notes to account that? So users of financial statement will come to know that these entity has followed whatever account. For example, FIFO method, weighted average method. Okay. For example, when you talk about the PP, AS10, they allow us the cost model, revaluation model. So they tell us that it. We have to inform in notes to account. So the users of financial statement will come to know which accounting policy we have followed, and it will help them for better understanding of financial statement that you know. Now, what do you mean by accounting policy? Because this AS1 talks about disclosure of accounting policy. So what do you mean by accounting? We know that accounting policy should be disclosed in notes to account. But what do you mean by accounting policy? They say accounting policy refer to specific accounting principles. Remember that. Two things they are talking about. They say specific accounting principles and method of applying those principles. So it tells us that here now. What is accounting policy? I will give an example that here. Specific accounting principle and methods of applying those principles. So let's take an example here. What is specific accounting principle? Specific accounting principle means, for example, that there are so many things. Let's talk about the inventory. Now, they say, what they say specific accounting principle? They say the valuation of inventory should be done at lower of cost or NRV. So when we do the valuation of inventory, they AS2 tell us that here we have to do the valuation at lower of cost or NRV. Why we take lower, we'll discuss in AS2. But this is specific accounting principle. And methods of applying those principles. What is methods of applying those principles? Okay, AS2 tell me that here inventory should be we should do the valuation at cost or NRV, whichever is lower. But how to do the valuation of cost? They say don't worry, you can follow FIFO method or you can follow weighted average method. So they tell us that here now the methods of applying those principles as well. So what is going to happen that here? What is accounting policy? These are specific accounting principle and they tell us the methods of applying those principles as well. Okay. So we call them accounting policy. Example inventory. What is specific accounting principle? we should do valuation at cost or NRV, whichever is lower. How to decide the cost valuation of inventory? By FIFO or weighted average method. So it means the methods also they are giving of applying those principles. Okay, there are so many examples are there. For example, PP, subsequent measurement instant, they allow us the cost or revaluation model. Choose whatever policy you want to choose. But what happened that here now? We have to disclose the notes to account. I'm giving an example of inventory because which is very relevant. You know it, the inventory. Okay. So this is meaning of accounting policy. First we discuss introduction where we have to disclose notes to account. What do you mean by accounting policy? Specific accounting principle and methods of applying those principles. Third point that here, need for disclosure. Why you think so that there should be need? Why do you need to disclose this accounting policy? First, enhance what? First, as enhanced understanding of what? The financial statement. Obviously, when we disclose the in notes to account, which accounting policy we have followed, see, the users of financial statements understanding will increase about this accounting standard. Facilitates comparison of financial. I can do the comparison from my last year performance. How much was the profit last year? How much is the profit this year? And what last year, which accounting policy we have followed and which accounting policy we are following during the current year. So it helped me for the purpose of comparison within the company or in fact outside the company as well within the same industry. For example, that year, one company which is dealing in the telecom industry. Okay. So Geo doing the comparison with the Idea. Okay. I'm giving an example that here. Okay. So if we know their accounting policy, the comparison is easy and certain time it is required by law. So required himself say, no, mandate like the Companies Act 20. They say, no, you have to disclose the accounting policy. So we have to follow the law here. So first thing that here we discuss the introduction that here now, then the meaning of accounting policy and why the need for the accounting policy. Okay. Now, next thing is very important that here, fundamental accounting assumptions. So when I say the fundamental accounting assumption, remember GCA. You will say, what is this GCA? Going concern, consistency and accrual. Now listen carefully. I see a certain time ask question on these fundamental accounting assumptions. Now listen carefully. The GCA is that here. First, they say these three fundamental accounting assumptions. No need, listen very carefully. These three fundamental accounting assumption GCA. What is GCA? Going concern, consistency and accrual. No need to disclose that we are following these fundamental accounting assumption. No, never. If we have not followed these GCA, then we have to disclose. Remember, very important point. These fundamental accounting assumptions that we are following, no need to mention in notes to account. If we are not following, then we have to disclose in notes to account that we have not followed these fundamental accounting assumptions. So what are these fundamental accounting assumptions? The first is the going concern. So it says that here now, assume the enterprise will continue. What is going concern? And we assume that the enterprise will continue in the foreseeable future, 1 year from the balance sheet date, and neither there is an intention nor there is a need to materially curtail the scale of operation. What does it mean that here? So we assume that here now, the entity is going to do the business at least for the foreseeable future, means at least for 1 year from the balance sheet date that year. Okay. Second is there is no intention nor there is a need to materially curtail. Materially curtail means, for example, we have example 10 factory. We are planning to close down 8 or 9. It means materially we are closing down the business that year. Okay. So if this is the case, then the going concern assumption, if we are closing it down, that then going concern assumption is not present. But what do you mean by going concern? The enterprise will continue in the foreseeable future and neither there is an intention nor there is a need to materially curtail the scale of operation that year. Okay, we don't have any intention or no need to do that here. So going concern assumption is present. Consistency. Whatever accounting policy we are following, we have to be consistent. But we can change in three situations. When we can change, if it is required by law. Okay. If accounting standard tomorrow say no, FIFO is not allowed. So we have to follow weighted average method. Okay. I'm just giving an example. If AS say, or for the better presentation, listen carefully. It might be happen certain time that year. We are following some accounting policy. And I'm not saying that accounting policies, I mean to say, because AS allow us to follow, for example, we are following FIFO method. So AS to allow us to follow the FIFO method. But dear student, what happened, if suppose tomorrow you realize that for me, FIFO method is not better. It is better for me to go for the weighted average method. It might be happen. If the price fluctuates, it is recommended to go for the weighted average method there. So it might be happen. I am following FIFO from the last 10 years, but I realize that for me, For better presentation, for me it is better to follow which is the weighted average method. So for better presentation, we can change the method. So it says that here now, when we can, accounting policy should be consistent unless it is set by law or accounting standard or for the better presentation. Under these three circumstances, we can change accounting policy. And it says that here accrual basis. What is this accrual basis of accounting? Okay, before you came in this commerce field that year, you might be thinking, so expense means when we pay something, it is an expense. When we receive something, it is an income. But no, when you started learning about this accounting, you come to know that here, no. That expense means that we have received the services. Okay, even though suppose the March month financial year end, even though we have not paid the salary, but still it is recorded as an expenses because we have received the services that year. So outstanding salary we'll call them. It is appear on liability side and we write it down in P&L as well that here. So accrual basis, they say transaction are recorded when they occur, not paid. Payment is not mandatory that here. Okay, credit purchase is also an expenses. Okay, so payment is not necessary. Irrespective of the cash movement, ensuring accurate profit determination. So payment, receipt and payment is not important. What is important here that here? If we have, if they say that a transaction are recognized when they occur, it means when we receive the services, okay, or when we receive the good, it is an expense even though we have not paid the amount. So these three fundamental accounting assumptions, we always assume that we are following. If we don't follow that here, then we have to disclose. So usually not specifically stated, disclosure is necessary if they are not followed. Okay. Now, when we do the selection of the accounting policy, what is the primary consideration that here? My financial statement should show what? The true and fair view. True and fair view. Okay. But they say for this true and fair view, you have to take into consideration three things. First is the prudence that here. What is this prudence? The key guiding rules considering while selecting policies so that the financial statement show true and fair. What do you mean by prudence? First of all, that here. What is consideration? First of all, consideration means that here. These are the guiding rules that we have to take into consideration so that my financial statement will show true and fair view. So what are these three conditions? Dear student, first is the prudence. The prudence is provisions are created for all known liabilities and losses, even if the exact amount, not necessary, we should know the exact amount. It might be happen, we don't know the example. For example, provision for doubtful debt. So we created example provision for doubtful debt 5%. Example that here. I may not be sure the actual bad debt will be 5%. Okay, no problem. But there is expected loss. Bad debt might be happen in future. So we create a provision. So not necessary with the exact amount. Okay, even if the exact amount are uncertain and represent only the best estimate. We don't book a expected gain. Expected losses we book and we call them the prudence concept. Second is substance over form. So when we choose this accounting policy, my primary agenda that my financial statement should be true and fair view. So I have to take into consideration that yes, prudence will I have follow. Substance or substance over form is record transaction based on the actual economic substance that is. Okay, actual economic substance in here it might on paper I may not be. Let me give an example. I purchased a land on 31st of March. I paid the amount. I took the possession of the land. But actually, the paperwork has not yet been done and it is not yet transferred in my name. It is going to happen on 15th of April. So you will say, sir, on 31st of March, you are not the owner of the land. I say, why? Because you paid the amount, you took the possession, but it is not transferred in your name. On paper, I may not be owner. But what is the reality? The reality is that I have the possession, I paid the amount. So I'm going to record in my books of account as it is my land, even though I'm not owner in paper. Best example, hire purchase. In case of a hire purchase, you know what happened? On last payment, the title transfer. Still, the purchaser record in their books of account as their asset. We call them substance over form. Now, the third thing we have to take into consideration, that is the materiality. What is materiality? Anything, listen carefully, anything which can influence the decision that here, and we call them the materiality. They say financial statement must show all important items and anything that could affect the decision of anything which can affect my decision that here, we call them the material. And material does not, we cannot say above this is material, below this is immaterial. We cannot say that. It depends the size of the organization. And certain time, even though it is a small amount, still we call it material. For example, in case of the material is not always, in case of a fraud. So you can see that materiality is not always about size. Even a small fraud may reveal a big weakness in control so that it must be reported. So fraud happen. It means a big issue. Even the amount is small. It is material that year. Okay. Because if you come to know in these companies, the fraud happened that year. It might change my decision. Now I will say, oh, that what happened? This company has done some fraud that year, even the small amount. So it might change my the here decision. So it's a material that year. And certain time, that sometimes rules are set clear under the law it is specifically mentioned, and this amount is material. Let me give an example. The example under the Companies Act 2013 Schedule 3. It says the income and expenditure, if any income or expenses is more than 1% of revenue from operation or rupees 100 or rupees 1 lakh, whichever is higher. So they say, actually under the Companies Act in Schedule 3 it is mentioned that here we have to show income or expenses separately that year. Okay, income expense separately if that amount of income or expense is 1% of if 1% of revenue or rupees 1 lakh, whichever is higher. Okay, so for example 1 lakh is the amount and we have to take 1% of revenue, whichever is higher. For example, 1% of revenue is coming 1,50,000 and 1 lakh is fixed, so I will take 1,50,000. So any income or expenses which is more than 1,50,000, I have to show them separately. Or they say one more example, they say if any shareholders hold more than 5%, then we have to disclose the detail of that in notes to account. So these are the items that we have to disclose, which is specifically mentioned in law. Okay, so now we have discussed about when we do the selection of accounting policy, we have to take into consideration the prudence, substance or form, and materiality. Now quickly we will cover the manner of disclosure of accounting. All relevant accounting policies should be disclosed at one place. We cannot be selective. Okay, accounting policy related to fixed asset on first page, then related to inventory on the third page. No. All accounting policy disclosure should be made at one place. Now, last one is very important. That is a change in accounting policy. Now, listen very carefully. They say any change in accounting policy with a material effect in the current period. It might happen when we change the accounting policy. Let me give an example. Suppose I am changing from FIFO to weighted average method. Okay, when I change from FIFO to weighted average method, what happened that here? So it might affect my current year profit, or it might be happen, it will affect my later profit, future year's profit. They say we have to disclose that. Not understand what we have to disclose. They say current year expected year later period must be disclosed. Not current. First, let's talk about the current period. So I changed the accounting policy. Because of that change, current year profit is going to be affected. Let me, for example, if I say I was following FIFO method. Now I am shifting to weighted average method. Under FIFO method, my profit is going to come 10 lakh. Now under weighted average method, it is coming suppose 12 lakh. So because of change in accounting policy, my profit is going to be affected by 2 lakh. Now imagine P&L account in your mind or trading a P&L account. I'm telling you in T form, so it will be easy for you to understand that here. This is my trading account. Instead of writing on trading account 10 as closing stock, I am to write how much? 12. So my profit will also increase by 2. So we have to disclose that here because of due to change in accounting policy from FIFO to weighted average method, my profit is going to increase by 2 lakhs. So amount we can ascertain, yes, it have to be disclosed. Now if amount not ascertained, I cannot, for example, now FIFO method, we want to change to weighted average method. Now we know that 12 lakh is the amount under the weighted average method. But when I ask to my, suppose it's a medical shop. And in this pharmacy, we maintain a software to track record of all the stock. We call to the IT person. We tell them change the method in the software from FIFO to weighted average. Now it is coming how much? 12 lakh. I ask him what is coming in previous method. They say I don't know, sir. I ask him no, I have to disclose it. They say no, sir. We have done the updation in the software. Now we cannot find it out how much is stock under the FIFO method. So I'm not in a position to find it out how much is the amount of stock in previous method, under the previous method if we follow that here. So if amount not ascertained, the fact to be disclosed that a method has been changed from FIFO to weighted average method, but I am not in a position to disclose how much it is going to affect my profit. Okay, it might happen that here, for example, now we change the method during the current year, but it is not going to affect during the current year, but in the later period. For example, under the FIFO method, suppose my stock is coming 10 lakh and I want to change to weighted average method. Under that also it is coming 10 lakh. So it is not going to affect materially same amount or almost nearby, you can say same amount in my example, same amount 10 lakh. So it is not going to affect my profit in the current year. But in future, I am not going to follow FIFO method. I will follow which method? Weighted average method. If I am to follow weighted average method in future, what is going to happen that in future? My the profit is going to affect it that here. So we have to disclose that here. This is important point and key word here, that not material in current period, but material in later period. So when we have to disclose in future, no, this is the main point. We are going to disclose fact of such change to be disclosed in current year. So we have to mention in notes to account that we have changed the accounting policy. Effect is going to come in coming financial year, and it will affect my profit in the coming financial year, and that we have to mention, disclose this thing in current year. So here ICI say, okay, we have changed the accounting policy, it is going to affect in future period profit. So should we disclose in the current year? The answer is yes. We have to disclose, we have changed the accounting policy, it is going to affect it future period profit, and that we have to disclose. Obviously, we cannot show how much profit will be affected in future. That we don't know, but we have to mention them. It is going to be affected in later period. Okay, so this is all about AS1, that is disclosure of accounting policy. I will come to question. Just quickly do the revision that here. So why it is important to do the here to a disclosure of the accounting policy? Because there are so many accounting policy, multiple accounting policy. It is important to disclose the accounting policy so the users of financial statement can take a wise decision. Second, meaning of accounting policy, it is a specific accounting principle and methods of applying those principles. Example, specific accounting principle AS2 we follow lower of cost or NRV, whichever is lower. Okay, then principal cost can be measured at FIFO or by FIFO or weighted average method. Now, need for disclosure of accounting enhance understandability, comparability, and certainly it is required by law in Companies Act. Fundamental accounting assumption GCA, going concern, consistency, and accrual. Going concern, we assume that business is going to be run for 1 year and neither there is intention nor there is need to materially curtail the operation. Second is the consistency. We have to follow the accounting policy consistently, but under 3 circumstances we can change the accounting policy which is required by law, accounting standard, or for better presentation. And accrual, when actually accrue, we have to record it, not actually on the moment of cash. Now, when we do the selection of accounting, policy, we have to be careful. My purpose is that here, primary consideration is that the financial statement should show the true and fair view. So we have to take into consideration the prudence, all expected losses we have to book, a substantial from reality, example, higher purchase that here, and the materiality. Okay, certain time materiality is maybe small amount, but it's material, like in case of a fraud, and certain time it is mentioned in law, that like in the Companies Act. Okay, now manner of disclosure of accounting policy, all accounting policy should be disclosed at one place. And change in accounting policy, that a change in accounting policy is going to affect during the current year. So we have to disclose the amount, how much your profit is going to be affected. Or if you cannot ascertain how much the profit is going to be affected, we have to disclose the fact that I am not in a position to find it out how much my profit is going to be affected due to change in accounting policy. And if it might happen due to change in accounting policy, future profit is going to be affected. So we have to disclose during the current year, the future profit is going to be affected because of change in accounting policy. Last one note is there, okay? Last one note is there that disclosure is not a remedy for wrong or inappropriate treatment in accounting. So what happened, that is certain time when we say I have done the disclosure, so something I have inappropriate accounting policy I have followed, that will not become accurate. Let me give an example. As per the accounting standard 2, LIFO method is not allowed. I say no, I follow LIFO method. I disclose it. I follow LIFO method, so it is correct. No. Disclosure does not mean disclosure is not a remedy for wrong or inappropriate treatment in accounting. So you cannot say I have disclosed it. It means whatever wrong I have done, that is correct. No, LIFO is not allowed. Even you disclose in notes to account that you follow LIFO method, that does not mean that method will become appropriate, because that is not allowed as per the accounting standard 2. That is, disclosure is not a remedy for wrong or inappropriate accounting treatment. Okay. Now we will come to super 100 question, but here remember that the question, I will start question number 8, because the question number from 1 to 7 is on the applicability of accounting standard framework. Okay, so let me start with question number 8, and don't worry, I will cover the applicability of accounting standard framework chapter as well. So what it says that here now, it says question number 8. Okay, what it says, state whether the following statement are true or false. Also give reason for your solution that here. Okay, so they ask us first, certain fundamental accounting assumptions underline the preparation and presentation of financial statement. They are usually specifically stated because their acceptance and use are not assumed. No. They are usually not specifically mentioned. It should not specifically stated because their acceptance and use are generally assumed. So they completely changed the sentence. Okay, we are GCA, going concern, consistency, and accrual. We usually don't mention. Why? Because it is generally they fall in the bit. If we don't follow those GC, then we have to disclose it. Therefore, the answer is what? The false here. Okay. And don't worry. When I teach, my purpose is to make the accounting like never before. So we will make it so simple. Now, it is so, keep one thing in your mind. You are going to score even following this revision series 60+ in advance. And let me tell you, it is very easy subject. Very easy subject, easily you can do that. Do you find anything difficult in AS1? Even people afraid of AS15, AS22, all, no, not at all are easy. Don't worry. Okay. Now, if fundamental accounting assumptions are not followed in presentation and preparation of financial statement, a specific disclosure, they say, is not required. False. If fundamental accounting assumption not follow, then we have to specifically disclose it. They say not required. It is required. If we don't follow GCA, we have to disclose it. Therefore, this is also false. Now, third, all significant accounting policy adopted in the preparation and presentation of financial statements should form part of the, yes, correct. Why? All significant accounting policy, where we have to disclose it? In notes to account. And remember that here, notes to account is also part of the financial statement. People are assume that financial statement means balance sheet and P&L. No, balance sheet, P&L, cash flow statement also, and notes to account. Notes to account is also part of the financial statement. Yes. So all significant accounting policy which is adopted in the preparation and presentation of accounting of financial statement, that is a part of the financial statement. Therefore, the answer is true. Now, any change in accounting policy which has a material effect should be disclosed. True. Okay. Material effect we have to disclose. But where the amount by which any item in the financial is affected by such change is not ascertainable. If we cannot ascertain, okay, still we have to disclose the fact. Wholly or in part, the fact need not be disclosed. Not need not. It should be disclosed. Therefore, this is also false. It should be disclosed. Okay. Now, there is no single list of accounting policy which are applicable to all circumstances. Correct? I told you that. We cannot give a single list. Now, this is going to be applicable to universe. No. Everyone, they have to decide which accounting policy is more relevant for, which is more suitable to them. For me, FIFO might be suitable for you. Weighted average might be suitable that here. Okay. So, therefore, there is no single list. Correct. Therefore, it is true. Okay, the answer of E is true. Okay, there is no single list. Okay, we cannot say these are the list of the accounting standards is going to be applicable universally to. No. I may follow FIFO, you may follow weighted average. Okay, now I am covering the important question which is the most important, relevant from the examination point of view. Okay, now question number 9. ABC Financial Services Limited is engaged in the business of financial services and is undergoing tight liquidity position since most of the assets of the company are blocked in various claims or petitions that here. Okay, so they are going very tight financial liquidity crunch that they have here. So many claims are going on. Very important. Okay, in a special code, ABC Financial Service Limited has accepted intercorporate deposit and it is making its best efforts to settle the dues. There were claims at varied rate of interest from the lender from the due date of these intercompany deposit to the date of repayment. Now, please understand the question. Let me read it, then I will explain it. The company has provided interest as per the terms of the contract till the date of due date. Okay, and note for non-provision of interest from the due date to the date of repayment was mentioned in financial statement. On account of uncertainty existing regarding the determination of the amount and in the absence of any specific legal obligation at present as per the terms of the contract, the company considered that these claims are in the nature of claims against the company. Don't worry, I will explain each and every point. Okay, not acknowledged as debt, and the same has been disclosed by way of a note. Okay, in the notes, instead of making a provision in the profit and loss account, state whether treatment done by the company is correct or not as per the relevant accounting. For understand the question. For example, that here they took a loan on 1st of April 25. Understand the question. Okay, this is the date of loan. Now what happened here? Now they take a loan here. They took a loan on 1st of April 25. The due date was supposed. Date is not mentioned in question. To make it simple, I am hypothetically considering some dates here. Now here on 30th of September that here now is a due date. Suppose that here. So they have to pay the interest along with the principal. But they failed to do the payment on due date. That is the 30th of September. They failed to do the payment that year. Okay. Then here on 31st of March comes. Suppose the year ends come. And then here, obviously the lender will say, if you fail to do the payment on due date that year, we have to pay them here by, I'm going to say, whenever we do the payment, we are doing the payment late here. So we have to do the payment interest of these period also. So what is mentioned in question that is, they have recorded interest in the books of account from the date of loan to the due date that year. Interest recorded that. Okay. But after the due date, unfortunately, they have not paid the amount here. So obviously interest will continue. But after the due date to the date of payment that year, they have not recorded the amount of interest here. So their argument is that here now. Their argument is that here, no, it is not mentioned in the contract that it is implied that even though not mentioned in the contract, if you're not doing the payment on due date, that is, what is going to happen if you're not doing the payment on the due date, that is, what is going to happen that year now? Now, still the interest will continue because you have not paid the amount. So their argument is incorrect. Now, which 2 points is going to affect? First, the prudence. Do you remember that here? I told you that here. All future expected losses, we have to book it. Explain why. You can see that here. Interest, why you have not recorded? Because so their entity here, the entity argument is that because on the due date, after the due date passed, so we are not going to record. But you have not paid the amount on due date, so interest will continue that here. So that is the expected loss we have to record. So what it says, provision is made for all expenses or loss. So expected. Okay. Now they say here. Now there one more concept, accrual. What accrual says that here now? When they will accrue that here. So you took a loan from the bank. You utilize that loan and you have not paid the interest that year. So if you have not, you use this fund for the purpose of business that year. If I'm using this fund for the purpose of business that year now, and I have not paid the interest that year, even on the due date that year. So what accrual says that here? You're using it for the purpose of business. We have to recognize that here. So the treatment given by them is incorrect. Okay. So because of what? Prudence accrual concept. This is what mentioned in the solution that year. Okay. As the revision lecture that year, but I have shared with you the PDF. You can read the answer, but concept I am mentioning. And remember that after every question, the quick revision highlights are mentioned there. So if you can pause the video later on when you took the printout of this, and you can write it down this point. You can write it down this point. So when you will do the revision before the examination, suppose today you have a paper that year at suppose 11 o'clock or 2. So what is done in morning that year? You just have to do a quick revision of this 100, which will take hardly 2 hours. Okay, and you don't have to read it at that time. You just have to quick revision highlights. You have to write it down. So you will know the answer. What is the final outcome of this question? Okay. Now I am coming to question number 10. So all the relevant question I have covered here. Okay. Now they say Jagannath Limited had made a right issue of shares in 2022. In the offer document to its member, it had projected a surplus of how much? 40 crores during the accounting year to end on 31st March 22. So basically they issue a right shares in the market. So in their offer letter, they say that they projected that they are going to make what? The 40 crores that year as a profit. Projection it is that year on 31st of March 22. The draft result for the year prepared on the hitherto the followed accounting policy and presented for pursuit of the board of directors showed deficit of 10 crore. But basically, when they prepare the draft on 31st of March, they draft of they say, but they are showing the 10 crore deficit. Initially, they projected that here they are going to make a profit of 10 crore, but they have the loss of 10 crore. They projected that there will be profit of 40 crore, but they have a loss of how much here? The 10 crore. So they say the board in the consultation with the managing director decided on the following. Why the loss comes? So they say first value year end inventory at works cost. Okay, the 50 crore instead of either two. Till now we were following some other method. Valuation of prime cost. As per the prime cost, understand, as per the prime cost, the inventory should be the 30 crore. Now we are not following that. We are doing the valuation that here at instead of 30 crore, we are doing the valuation works cost. So instead of 30 crore, we have to record the inventory 50 crore. So instead of 30, I have to record 50. Now you imagine it's your P&L account. Now imagine a T form, so it will be easy for you to understand the concept here. What is going to happen that here now? Instead of 30, if I am going to record my closing stock at 50, my profit is going to increase by 20. So because of this change in accounting policy, how my profit is going to affect? My profit is going to increase by 20 crores. So you can see that here now. They say increased by rupees 20 crores. Understand the logic. In my P&L account, a trading account, instead of 30, I'm recording 50. So my profit will increase by 20. Okay. Now, second, provide for permanent diminution in the value of inventory which had taken place over the past 5 years, the amount of provision being 10 crore. Now, there is a permanent diminution in the value of the investment, which was this diminution in the value of the investment is 13, okay, going down from the last 5 years. But actually, we recorded during the current year only. So, because of that here, you recorded in the current year as an expenses that year. So, P&L account debited, your profit will go down. So because of this change in accounting policy, that suddenly you have to record from the last 5 years. Okay, but suddenly you have record because of that, your profit will go down. So you can see that here now, reduce the profit, disclosing the accounts by rupees 10 crore. Okay, so they were projected profit, but they have a loss, and they say what effect is going to come in my P&L because of change in accounting policy. So we discuss about how the profit and loss account is going to be affected because of this change in accounting policy. Remember that, okay? Write all these. It is going to help you before the examination, okay? The last question for on AS1. Now they say ABC Limited was making provision for non-moving inventories based on issue for the last 12 months up to 31st of March 2016. So what they were doing that here, they are making a provision on the of inventory, slow moving item, not selling in the market. So they say they make a provision on the past data, past record of the previous 12 month performance. On the basis of that, they decide how much provision should be made on that. Now the company wants to provide during the year ending 31st March 2017 based on technical evaluation. Now they want to take the expert advice. What we are doing in past, I am making a provision on inventory on the slow moving item on the basis of their previous 12 month performance. Now in this current year, I don't want to make a provision on the basis of previous 12 month performance. I will take the expert advice, the technical evaluation. Like the expert review, example, engineers. I will take the expert advice. Okay. So here, before I discuss about it, one very important sentence I have written that here. Listen carefully. It says that if the intention, listen carefully. They say if the intention to change the method, I am saying my intention to change the method is to find it out the amount, then it is a change in accounting estimate. I am repeating this. This is not at all a change in accounting policy. I am saying it is a change in accounting estimate. Now listen carefully. If my intention to change the method is to find out the amount, then this is change in accounting estimate. So here my intention to change the method from the past performance to the expert advice, then I will decide the amount. Okay, I am not going to decide the amount of provision on the basis of the past record. I want to decide the amount on the basis of what? The expert advice. So here my intention to change the method is to what? To find it out the amount. We call them change in accounting estimate. Okay. Now you see in both the methods we are finding the amount. For example, FIFO method to weighted average. My intention is not when I go from FIFO to weighted average, whether my intention is here to find it out the amount here. No, my intention is not to find it out the amount. Both the method will give me some amount, but when I change from FIFO to weighted average, my intention was not to find the amount. Okay. Now, so that is change in accounting policy. Here my intention from the past 12 months performance to decide the amount of provision. Here I am finding out the amount of provision through the technical evaluation. This is some technical, for example, engineers. Okay. So here my intention to change the method is to find it out the amount. We call them change in accounting estimate. This is the key words here. Okay. So here, so the total amount of inventory is 100 lakh. Now, as per the past record, if I go to 12 month performance, it is 3.5 lakh. I am converting from 3.5 to 2.5. Okay. So they ask us, does this amount to change in accounting policy? No, it's a change in accounting estimate. Can the company change the method of provision? Yes. If they find it the future estimate when they're estimating the amount, there's some another way which gives a more accurate amount. No problem that here you can change the methods of the provision that you to find it out the amount. So this is not at all a change in accounting policy. It's a change in accounting estimate here. And here we complete our accounting standard 1 revision along with the important question, because after this the AS2 will start. That will come in next lecture. And let me tell you that here, keep one thing in mind, you are going to score at least 60 plus in advanced accounting in coming attempt, and be confident. Yes, definitely that here you are going to crack coming attempt. Just you have to follow this instruction, and what I'm telling you there, just do the practice that here. Don't worry, soon amalgamation, consolidation, cash flow, all these chapters I'm going to take a separate marathon, full-fledged lecture on amalgamation will come 7-8 hours only that year. I will solve questions that discuss with you each and every concept about the consolidation steps and all that. I will discuss with you that here. Okay. In consolidation, I will tell you what are the how to follow those steps in detail. That I will explain you. That you can see that these are the notes of consolidation that here. Okay. All steps working on. Each and everything I'm going to cover in those marathon. If you like it that year, don't forget to comment there. If you have any doubt, comment here in section. I will reply you this. That is for today. Take care all of you, and trust me, one thing I promise you, I will make it account so simple like never before. So that is for today. Take care all of you. Bye bye.